Good afternoon. Welcome all to the FY18 results conference call for BHEL. From the management, we have Mr. Atul Sopti, Chairman and Managing Director, BHEL, and his team. I would now request Mr. Sopti to introduce his team and then share his initial remarks on the way the quarter have gone by. Over to you, sir.
Members of the management, your line is unmuted. Please go ahead. Members of the management, your line is connected to the conference. Please go ahead.
So Aditya is not coming. So shall we start with the opening remarks?
Sure, so we can start with the opening remarks. This is Aditya.
Okay. Yeah. Thank you, Aditya. Good evening, friends. I'm Atul Sopti, CMD BHEL. I have with me Mr. Subodh Gupta, our Director Finance, Mr. Amitabh Mathur, our Director Industry Sector, Mr. Akhil Joshi, Director Power, Mr. Vishwas, our Director Engineering, Mr. Bandyopadhyay, our Director HR, and Mr. G.K. Hadau, our Executive Director Power Sector Marketing. A very warm welcome to all of you. First, on the macro front, as all of you are aware, India has achieved 100% village electrification on 28th of April. Now, government is targeting to move from 100% village electrification to 100% household electrification by end December 2018. This improvement in accessibility and availability of electricity is one of the most significant changes underway in our power business segment. As of 2011, as you are aware, only 55% of India's rural household had access to electricity. This jumped to 73% in December 17. The sharp increase in some north and east Indian states has been more noticeable. Utilities are sensitive to these developments, and we are seeing renewed interest among them in respect of new projects. Secondly, government is taking various steps for revival of the standard projects in power sector. During the financial year 17-18, we too made significant progress in reviving orders which were non-executable due to various reasons. Revival of 5 into 800 megawatt Yadadri thermal power project being executed by BHEL on EPC basis and was the largest ever order was revived in October 2017. Finally, opportunities from emission norms may get big traction with expected policy change in tariff. Coming to our performance during financial year 17-18, we reinforced our leadership position in a shrunken and highly competitive Indian power market by securing all orders of thermal power projects during the year. This has been possible due to strong focus on increased localization of supercritical technology and design optimization, resulting in improved competitiveness. Incidentally, all these projects have been won against stiff competition. Continuing with our focus on increasing non-coal business, we won the highest ever order in transportation, defense and aerospace and water business. The total orders booked by the company during the year were rupees 40,932 crores. Some of the significant orders which were received: 3 into 800 megawatt Qtr4 thermal power projects from PVUNL, a joint venture of NTPC and Government of Jharkhand; 2 into 660 megawatt Udangudi thermal power project from Tanzatco, Tamil Nadu; 1 into 660 megawatt Panki thermal power project from UPRVNL, Uttar Pradesh; 1 into 660 megawatt Bhusawal thermal power project from Mahajanko, Maharashtra; nuclear SG package for 2 into 700 megawatt Gorakhpur from NPCIL; 75 megawatt captive power plant for Vizag refinery from HPCL. Then under transportation business, major orders for Indian Railways were 30 numbers WAG 9H electric locomotives, 146 sets IGBT-based three-phase electrics for MEMU, and 161 sets of IGBT-based propulsion equipment for electric locos. Various orders for solar PV power projects received during the year total to 155 megawatt. Decentralized sewage treatment plant of 25.42 MLD capacity from Raipur Development Authority, Chhattisgarh in water business. In transmission business, major order was 765 400 kV substations at Medinipur and Jirat from PGCIL. Ladies and gentlemen, with this, the total orders in hand now BHEL has are over 1,18,000 crore, which is the highest during the last 5-year period. If we talk of the renewable energy front specifically, BHEL solar PV portfolio has now crossed 550 megawatt. And during financial year 17-18, 163 megawatt of ground-mounted solar and 7 megawatt of rooftop solar power was synchronized with the grid. First ever air-conditioned AC-EMU train for Mumbai Suburban was put into operation in December 17. It is equipped with state-of-art propulsion equipment designed and developed by BHEL. I am happy to share with you that it has already successfully run over 64,000 kilometers. This has paved the way for new business under transportation vertical for BHEL. Continuing the strategy of building capacity and capability through in-house resources and collaboration with global technology leaders, the company has recently entered into a technology collaboration agreement with Kawasaki Heavy Industries Limited, Japan, for manufacture of stainless steel coaches and bogies for metro rails. As part of the diversification strategy, BHEL has also entered into a technology transfer agreement with ISRO for the manufacture of space-grade lithium iron cells of various capacities. This transfer of technology will enable BHEL to manufacture lithium iron cells in-house for ISRO and other suitable applications. The financial results are already with you. I will just read out few achievements. First is the company registered a turnover of 27,850 crore as against 27,740 crores in 16-17. Notably, on a comparable basis, the turnover of financial year 18 would have been higher by 488 crores, totaling to rupees 28,330 crore, a jump of 2.2% over the previous year, considering the duties and taxes on bought-out items and turnover for civil works, which were earlier forming part of turnover and pre-GST regime. Profit before tax for the whole year stands at rupees 1585 crores, year-on-year growth of 152%. Profit after tax for the year stands at rupees 807 crores, year-on-year growth of 63%. Thank you all once again for joining the conference. We'll take the questions now.
Thank you very much. Ladies and gentlemen, we will now begin with the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Bhavan Vitlani from Axis Capital. Please go ahead.
Good evening, gentlemen, and congratulations for good performance after a long period of time.
Thank you very much.
So I had a few questions. First, if you could give us what is the executable order book as of now, and also which are the orders that you see on the pipeline that we could expect over the fiscal year 18-19?
Okay. Coming to the executable orders, I am very happy to share with you the executable orders have gone up substantially during the current financial year. As I mentioned, the total order book outstanding as on date is over 1,18,000 crore. Out of that, nearly 98,600 crores are now executable. So very few orders are left which are non-executable today. This 98,628 crore, when compared with the previous year-end figure, it was 65,660 crore. A jump of 50% in the executable orders. This is the position regarding the order book position. this leads to quite a healthy order booking for the organization. If we talk about the orders in the pipeline, during the current financial year, I am pleased to share in the last 1.5 to 2 months period, already we have secured orders worth 1,800 crores. 1,800 crores orders have already been secured. And in addition to that, almost close to 15,000 to 16,000 crores of the orders, we are well placed. Like the first order is NTPC Talcher is there, which is 6,300 crores is there. Singareni is there. This is 1 into 800 megawatt, where we are negotiating. This is on the nomination basis. This is under negotiation. Then there are boiler, FGD and emission control equipment is there. Like this is close to 2,400 crores are there with different utilities we are talking, Bhadradri, Kothagudam, Udangudi, Bhusawal, and there are certain orders for the SSBG front, spares and services also, where we are well placed. In addition to that, there are a number of projects for the industry sector where we are well placed. So totaling to almost 16,000 crores of the orders, the company is well placed today.
So the orders that are, where the tenders are opened, you are expecting these orders to be finalized during the course of the fiscal year. Which would be these? You had mentioned about 9 to 10,000 megawatts.
Expectations are that almost all these orders where we are well placed will get finalized during the current financial year. Because as I mentioned, first is a Talcher order. Talcher is 660 megawatt. There, in fact, we are the lowest. Only some clearances, NTPC is awaited. This is close to, I think, 6,300 crores. This order will get finalized. Boiler modification, already we are in the final stage of discussion. That is 2,400 crores. This order we are expecting to finalization. Then, if we talk about the solar area, we are in the final stage of discussion with AP Genco, then Gujarat, Mahagenco, and where we hope that orders will finalize. Then there are with the Indian Railways, close to 400 crores orders are in the final stages. In international operation, there is a project in Tanzania where we are well placed. In fact, initial advance, minor advance has also been achieved. So we are hopeful that these will get finalized. This 16,000 crores in addition to 1,800 crores already which we have secured up to May.
No, so my question was that there is NTPC Singrauli, there is NTPC Lara Express.
This I mentioned where we are well placed. If you are talking about the new orders, new tenders in pipeline, then there are many tenders in pipeline, like Sagar Dighi. First of all, I will start about the Sagar Dighi. This is 1 into 660 megawatt, where we submitted the bid in March 18. Now the post-bid discussions are underway. Then there is NLC Naveli is there, 2 into 660 megawatt. Then NTPC Singrauli is there. Then NTPC Singrauli is 2 into 660 megawatt. THDC Khurja is there. SJVN Buxar is there. And there is NLC Talbira is there, 3 into 800 megawatt. If you put together all these tenders, almost 10 to 11,000 megawatt orders are in pipeline. And I hope that close to 8 to 10 gigawatt will get finalized during the current financial year.
Sure. So my last question is, on the consolidated results, there was a 400 crore loss from the joint ventures. If you could throw some light on this.
Actually, I am Subodh Gupta, Director of Finance with BHEL. This is, we have joint venture with Raichur Power Corporation Limited. This 350 crore loss is there only. But we have not taken in our standalone books because accounting standards does not even recognize losses as well as profit. Only dividends are taken. In the
consolidated, as what he is mentioning, it is primarily because of the Raichur Power Corporation Limited. RPCL. RPCL has just started, that is, the 2 into 800 megawatt project.
Right. So we understand this is a cost plus project, about 3,300 or
project is cost plus, that's okay. But what is happening, that first let me give you something about this. For BHEL, it was an EPC project. That is, of course, going to our revenue. But for the RPCL, this is joint venture of KPCL, BHEL, and IFCI. But out of the two projects, in fact, out of the 2 units, because of some demand issues and certain other input issues, only 1 unit is running at the moment. second unit is at the moment is not running. We hope that this financial year, both the units will be running. Then, and in any case, in the first year, definitely any project when the first year operation, there are losses which were envisaged also.
Okay, fine. Yeah, thank you so much. I'll come back in the queue for more.
Yeah, sure.
Thank you. We take the next question from the line of Venugopal Kari from Bernstein. Please go ahead.
Hi, thanks for the opportunity. Firstly, I wanted to know this, when I look at segmental profit margins for both the power and industry sector, there has been a fairly sharp decline on a YOY basis for both, and sequentially when power has also declined sequentially for power. And there's a lot of movement in the other unallocated expenditure net of income, which seems to be the major driver. So just wanted to understand what are the drivers for this other unallocated expenditure net of income, especially given that segmental margins, are down YOY, and any comments on that will also be great.
One of the, although details can be provided separately, there is not much of, just for me the segment. Profit as a percentage of power. Okay. In the 17-18, if we talk of the total segment profit.
So this quarter.
You're talking of the quarter. Okay, quarter for quarter 4. 17-18 power is 909 and for the 1129 crores in the 16-17. Okay. Yeah. And the industry it is 57 as against 268. Basically this particular it depends on the type of order which has been there. This kind of profit is there. But if you talk of unallocated portion of the profit which has not been accounted for in this segment is one of the major area is your exchange rate variation also, which has not been accounted for in this allocation up to this.
Sir, actually the question I think you are asking, regarding this increase in share of unallocated expenditure. Actually it has gone down. If you see the...
Yeah, that's exactly. So that it's gone down. So I wanted to know why it has gone down.
Is it an exchange rate? We have now more specific with respect to allocation of overheads. So whatever overheads pertain to power sector, we have distributed there and as well as to industry sector. So the commonality has gone down.
So there is an exchange rate variation gain sitting there on a YOY basis? Because the reason I'm asking is, look, last year in Q4, you had a one-off gratuity provision of about 670 crore.
Yeah.
And I'm assuming there is nothing like that in March 18, fourth quarter. So that's a 600 crore variation. Is that the major driver for this 1,000 crore reduction in other unallocated expenditure net income?
No, that's not the reason. Actually, this allocation of, specific, basically I've just told you, we have specifically identified the expenses power as well as for industry sector. So it has nothing to do with the gratuity.
No.
It's more of a specific, sir. Actually, that used to be a common share of an unallocated expenditure. Now we have identified which pertains to power and which to industry.
Okay, so I think I'll probably take this offline because I wanted to understand
I think this question, these particular things will be explained to you offline. In the unallocated portion, you were saying that last time gratuity, etc., one-time allocations were there, which were not distributed to the power and industry.
Possible. And as I understand your comment on power industry reduction in margins in this quarter is because of the mix.
But I'll say, I'll request you that our Director of Finance, Mr. Suhur Gupta, will explain to you offline about
that. I will call separately. My second question, sir, is since you would have signed the MOU, with the government, what is the MOU guidance base and excellent for this year, FY19, revenues gross?
In fact, for the, just a minute, very good rating, it is 32,000 crore, and for the good rating, it is 30,000 crore. This is revenue from operations.
Revenue from operations.
This is revenue from operations. In fact, revenue from operations, normally in the MOU parameter is revenue from operation. Revenue from operation, as per the definition of MOU, the other operation income also gets added to the turnover.
Okay, so that's 30,000 crore base level. Yeah. 32,000 excellent, 30,000 crore base, right?
30,000 is the base.
Okay. Sir, lastly, tax rate has moved a lot through the year. What is the tax rate we should be looking at for the next year?
Probably if you see, there are two components of tax. One is current tax and another is deferred tax.
Yeah.
So if you see that current tax has gone down as compared to last year, it is almost at the level of 36.5, which is near to statutory rate of 34%. So this deferred tax this time, this deferred tax assets were going up. So whole idea was to see, and we have assessed the entire deferred tax assets. And whatever assets where the benefit is not likely to be available, this tax benefits, we have removed those assets, and because of that reason, our tax expense has also gone up. So this is
we expect the same ratio to continue what has been the current financial year.
No, sir. Actually,
how much percentage will come
right now? It's 49%, but I don't think so that it will be 49% next year.
How much is expected?
It should be in the range of maybe around 38 to 40%.
38 to 40%.
38 to 40%.
Yeah.
No, thank you, sir. This is very useful. Thank you so much.
Thank you. Good.
Thank you. We take the next question from the line of Abhishek Puri from Deutsche Equities. Please go ahead.
Yes, good evening, sir, and congratulations for good set of results.
Good evening. Thank you, Abhishek.
Sir, two questions from my side. One, if you can give us some order value breakup from various segments that you mentioned initially, transport, solar, FGD, that will help us, project the next year order inflows better. And secondly, on the debtors side, we see that debtors have actually gone up. I think last quarter you explained it, that's because of GST and unbilled revenues. Maybe if you can give us some details as to what are pending for more than 1 year, what are pending for more than 3 years, how much is the unbilled amount, because this issue seems to be sticky, it's not coming down, and where is it really stuck, and when can we expect the resolution on that side? Thank you.
Okay. I'll just give you the orders which have been secured in the defense, which is the maximum I mentioned. We achieved for example, in defense, we got 585 crores of the orders, which was last year was 533. In the transportation, this year we achieved 2181 crore of the orders in the transportation segment, as against 1005 of last financial year. In the water area, of course, it's a beginning which has been made, close to 70 crores were achieved. In case of solar, we have achieved 532 crores. These are the details of the major business groups. But if we talk about the industry sector, total orders which have been secured during the financial year, they are 7,500 plus, 7,500 plus, which as compared to the last year was 6181. So there is a jump.
22% jump.
22% jump is there in the current financial year, and we hope this may continue next year also.
And how about the FGD orders in this and a captive power plant?
I'll just tell you. FGD orders, in fact, is this particular year. This year, the FGD orders were 3,350 crores. This is FGD plus boiler modification plus SCR.
Okay.
All things put together.
And captive power plants?
Captive power plants about 1,590 or about 1,600.
Around 1,600 crores.
Captive is picking up.
Thank you. And on the debtors issue, sir, if you can give us some details, please.
On the debtors issue, you are saying that why it is still not coming under control.
Yes, sir.
We are, in fact, now what we are trying to do, there are two aspects in this debtors area. If we take the total debtors which we have as of now, out of that, majority of the debts are coming, total trade receivable is 35,493 crore. Out of 35,493, if we see, actually collectible debts is 17,494. This is and deferred is 16,394 crores. Okay. So out of the, all these debts we are seeing, majority are primarily from the state utilities and the central PSUs. And private sector, in fact, of late, with compared to the last year, they have gone down. So what efforts we are making? We are making twofold efforts. One is deferred conversion to the collectible debts. Therefore, it is completion of the milestones so that we become eligible for getting the money against these particular milestones. A lot of efforts are being made in that regard. We have made separate groups in the organization, and last year there was a lot of movement which has taken place from the deferred to collectible, and I hope that this year that momentum will start. Second point which we are trying to do, now we are trying to become quite strict with even the state utilities also, as well as the private sector also. First, we are trying to focus on the money realization and then moving forward for the other business. I hope that in this current financial year, some betterment may take place. But one positive point is there. If we see the current ratios if you take, that is this has gone down substantially as compared to the last, from 2.1, it has gone to 1.9. 1.9.
And there is also an increase in trade payables, almost by 22%, as compared to receivable, which has gone only 11%. This is because of our back-to-back strategy. Even we are also following the strategy. Deferred payment is more with customers, so the same thing we are doing with vendors and contractors also.
How much is the private sector amount in this? And
I'll tell you. Out of this, you're talking about this 35,493. If you take state utility is 13170, and central PSU is 14708.
And private sector would be the balance of?
Private sector is 7496. 7496.
Provided for?
Pardon? Sorry, 5496. Just I'll repeat it again. State utility is 13170. Central PSU is 14708. Government department is 763. And private is 5496. And export is 1356. It's a broad distribution of 35,490.
And you had mentioned earlier that you have provided for the private sector side.
Private sector for those which are standard projects, not for the projects which are live.
So what's the amount, sir? If you can repeat as of end of FY18.
Well, how much is the provision? Just a minute. How much is that? How much provision has been made against?
1958.
1958.
Yes.
1958 was.
Thank you so much. And I'll join back in the queue for the questions.
Thank you, Abhishek.
Thank you. We take the next question from the line of Charanjit Singh from B&K Securities. Please go ahead.
Hello, sir. Thanks for the opportunity. So this current executable order backlog, which we have around 96,000 crores, so what is the execution time frame? It is like 2.5, 3 years or more than that?
Okay. It is basically, it is almost starting from 1 to 3 years period. So 3.5 years. 3.5 years. Because I'll tell you, if we see the projects which are under execution, majority of the execution for the new project is 3 to 4 years period. The work has already started.
So means like this order backlog of 90,000 crores will get executed over 3.5 years, correct?
3.5 years, yes, correct, sir.
Okay, sir. And sir, if you see this quarter,
I'd like to clarify to you. You were mentioning the figure of 96,000. It is not 96,000. It is 98,600 plus.
Yeah. Okay. And sir, in this quarter we have seen there's a substantial jump in the employee cost. What is the reason for that, and how do we see overall full year employee cost going forward in FY19-20?
FY19, basically one of the reason is of course making certain provisions for the workers, etc. And overall impact of the wage revision we are expecting, which is coming, is close to 800 crores per year. And next year employee cost, overall employee cost will go up not more than 500 crores as compared to the present level of current level. Not more. This is our expectation. Let's see how the final negotiation takes place with the workers.
And so on the raw material front, how do we see that panning out, and gross margin? What could be the levels which would be able to sustain going forward as the raw material prices are seeing increase?
I agree. Raw material, in fact, what has this particular year, there is a lot of reduction in the raw material cost. You would have seen that raw material cost has come down to 58% as against 61.7% of the previous year. And Q4, in fact, there has been very sharp decline. There are many reasons of this material consumption going down. You know that material consumption is dependent on many factors, like composition of the turnover, how much is the shop production, how much is the bought out item, then project mix also, then the type of order, how remunerative this particular order is there. And this going forward, we do agree that there are upward movement in the prices of the raw material, but most of the material for the next financial year has already been ordered by BHEL. And second thing is that in many cases there are PVC, especially NTPC project, there is a PVC prices also, so that will also get covered. But the kind of material cost, that material cost which have been able to get in 17-18, it will be a challenge to maintain that in the next financial year. Let's see, we'll try our best to maintain that.
So there could be 100 to 100 basis point increase, or how do we see that?
There could be some increase. How much will be there, that will be very difficult for me to see, because now we are trying to work out what will be the composition of the order, whether it will be more remunerative or non-remunerative. Somewhat, but our overall emphasis during the last few years, you would have seen continuous reduction in the material cost, and this has definitely given rich dividends to the organization through cost optimization, through better procurement, bulking of the requirements, and there could be slight movement up, but efforts will be there to contain it to that level. Let's see how the things move.
And so the last question from my side is, sir, if you look at the interest, cost during the quarter, the number has been, pretty low versus our general trend of doing 300 crores kind of a number. So how do we see this number? What is some one-off or something?
Interest cost for the quarter you are saying is 73 crores as against 314 crores. That's what you are saying?
Yeah.
It is primarily due to the unwinding of the provisions. This is interest related to the unwinding of the provision as per the Ind AS. In 16-17, this figure was 259, which has come down to 45. It is, if you talk about the direct interest cost direct, that is remaining the same. It is remaining 22 crores as against 25 crores of the previous year. But this reduction is primarily due to the Ind AS unwinding adjustments.
Okay, sir. Fine, sir. Thanks a lot for taking my questions. All the best for the future.
Thank you. Thank you, dear.
Thank you. We take the next question from the line of Venkatesh Balasubramaniam from Citi Research. Please go ahead.
Sir, congratulations on a good quarter and a good year.
Thank you, Venkatesh. You are always a source of inspiration to us. Good.
Sir, if you look at what you gave the very good level, you said that is around 32,000 crores.
32,000 is excellent. 30,000 is very good.
Okay, excellent. Now, if you look at it, you said this is basically revenue from operations plus other operational income.
Yeah,
when I look at the same number in the current year, it is around 28,900 crores. So that basically means you are basically telling at the excellent level you will grow revenues at around 11%. Now, which I find very on the lower side, primarily because, see, your backlog has grown 12%. So from that perspective, yes, 11% sales growth seems okay, but your executable backlog has gone up 50%. So why are we not doing even 20% sales growth in the current year?
Yes, internal target would be on those lines, but of course MO is based on the negotiation with the government. I cannot say more than that. But our internal aim would be to grow substantially this financial year. Okay. Having got such an executable order booking, unfortunately what happened, most of the orders came in the second half of the year. If they would have come in the last year, then top line would have grown substantially in the last financial year also. This year we are hopeful growth will be substantial. It's very difficult for me to predict how much, but growth will be there. Let's not compare with MO is not the real indicator for comparison.
Okay. So 33,000 crore kind of a turnover is not unrealistic.
I would like to comment on that. That's for you to judge. Of course, internally we should target as much as possible, as high as possible.
Okay. Now, sir, your wage hike provisions, are they behind us now? Like, for example, I am a little surprised because this year you have around, your staff cost was around 6,020 crores. We thought the staff cost should largely remain at the same level next year because you have made whatever provisions. Why are you telling there will be another 500 crores possibility it could increase next year?
Basically, that our expectations are they will target would be close to 6,000 crore, which we have written there. But we have yet to negotiate with our workers. And based on what is going to the final negotiation, it depends on that. I mean, 200, 300 crore plus minus don't make much of the difference. 6,000 crore plus is a good figure which we will try to retain that. Otherwise, wage revision things are now possible. We already have made all the provisions for that.
Okay. On a related note, what is the total employee count that you have at the end of the year and what is your projection? You know, can we keep on reducing this wage, the number of employees? Or
definitely. This is basically the number of employees at the beginning of the year was 39,821 and now it has gone down to 37,542. So close to 2,000 employees every year are superannuating and induction is as compared to that is less. So there is enough reduction of around 2,000 employees.
So can we continue doing this 2,000 employees?
We will continue doing it, but we have the plans of inducting certain experts, especially in the new business areas. Induction would not be at that level of 2,000, but some induction will take place. And there will be reduction definitely in the manpower cost.
Okay.
Our aim ultimately is to have the turnover per employee close to 1 crore per person, at least.
Okay. Again, an answer which you have already given, that you are expecting tax rates of 38 to 40% in the current year. Why should you be paying 38 to 40% tax rates? Why is it? Shouldn't it be closer to 36% or so?
Actually, the tax cost, what I have explained, it is basically, it has two components. One is current tax, which is payable to the income tax. And second is your deferred tax. So if you see, we will be very close to the current tax. It will be in the range of 34%. But definitely certain provisions or assets would be there where immediately the tax benefit will not be available. That will be deferring for future. So 30 means it's just an estimate I gave you. Means on a site maybe in the range of 35 to 38% also. It's an approximate figure with what we have given right now.
Okay. Sir, is it possible to share what is the exchange rate variation and the interest income as a part of the other income this year, in the current year?
In the other income, in fact, if you talk about for the year the interest income was 591 crores.
Yes, sir.
591.
And exchange rate variation, sir?
522 crores. 520, no? 520.
Sir, how is that possible? Your total other income is 693 crores for the full year. So the numbers don't add up.
Yes, just I'll tell you. Other income is 693 crores. If we talk of other income, it comprises of interest income 591 crores and dividends is 15 crores and dividend from profit and sales of units in mutual fund 37 crores. Then other is 51 crores. But exchange rate is not exchange rate variation is not as a part of other income. Yes. This is being shown separately.
Yeah. Actually, if you see this year we have changed, if we have compared the practice of, taking this exchange rate variation in other companies also, L&T, Siemens, ABB and other companies, they are all taking it as a part of miscellaneous expenses. But when loss is there, it was booked as miscellaneous expenses. When the gain was there, it was taken as other income. So now we have taken this as a reduction from miscellaneous expenses. The gain this year is 520 crores. Last year it was a loss of 270.
Okay, so you have a gain of 520 crores.
Yeah, we have a gain of 522 crores, which has been booked under the other expenses.
Other expenses, reduction.
Other expenses. Okay, sir. And one last one. Why has your other operational income jumped from almost 634 crores to 963 crores? What is the big jump?
Other operating income has jumped from this 859 to 963 crore it is coming. Which figure you are referring to?
Okay.
This is from 859. Just see that. It is not much. It is minor changes there.
Is it possible to share the breakup? What are the largest item in this other operational income?
Basically patent insurance. is 290 crores. And scrap sales is 150 crores.
Okay. Okay. Thank you very much, sir. All the very best.
Thank you. Thank you.
Thank you. We take the next question from the line of Renu Beth from IIFL. Please go ahead.
Yeah, hi, good evening, sir.
Good evening.
Couple of things that I would like to understand. First, in the other expense side, we usually have this amount related to provisions, which pertains to warranty obligations, debtors, output, and others. So if you can help us, what was the number for the entire financial year?
Other expenses, you're saying?
Yeah.
That's true. In the other expenses, you would have seen that 17-18 is 2823 crores as against 16-17 of 4881. We are on the same page?
Yeah.
Okay. This other expenses, if you see, this includes, as I mentioned, this time 520 crores of the exchange rate variation gain. But if you see, actual other expenses is 2211 as compared to 2291 of last financial year.
Mm-hmm.
I'm giving the breakup of 4823 first of all. Other 4823, the expenses are 2211. Exchange rate gains is 520, which will come as minus. Power and fuel will come 463. Indirect material is coming 286 crore. And the provision and write-off is 2282.
And so, if you can help us understand any specific reason why such a sharp jump in provision and write-off? Because last year one can understand that there were amounts related and they were write-backs. This year the number seems to be pretty large in terms of 2200 crores.
Yeah, this is basically many of the projects which have been completed. And in fact, we have taken a conservative approach. We have made the provisions for those projects where LD on paper is there and is still being discussed with the customer, and trial operation was over about 3 years back. So as a policy, we have made those provisions. As soon as we are able to get this LD money recovered from the customer, then it will be get added to the profit. It's primarily because of that account. There is a change as compared to the last year of 800 crores, 838 crores.
Okay. And so, was the provision related to any specific project that we have done, or it's part of the usual, the 2.5?
It's a part of the usual, no specific, nothing specific. It's part of the usual, nothing related to any standard or anything.
Right. Okay. And, sir, on the overall material cost, you did mention that there are headwinds and you expect the material cost to come down. Would that also be attributable, material cost to increase, would that also be attributable to the change in mix and execution? Because incrementally in the next 2 years, we'll have more of EPC projects being executed.
Some increase may be there, but we will try to contain that. Definitely when EPC is there, at that point, but EPC was this financial year also, a number of EPC projects were there. And but next year, I do agree the composition of in-house manufacturing and bought-out items, there may be slight change. Because this year, majority of the things were manufactured in-house, and when the EPC project more bought-out will be there next year, there could be, slight change in the material cost.
Right. So second would be just some clarification again on the employee expenses. Until the last quarter, if I remember right, we were making a quarterly provision of approximately 250 crores per quarter as provision related to wage expenses, wage division, which means for 3 quarters about 750 crores. And you mentioned that for the entire year of the total, because it seems that there is some realignment of provisions from other expenses to staff expenses on account of wage revision. So you mentioned the amount for the entire year is just 800 crores and not 1,000 crores, which was initially expected.
Yeah, it's going to be 800 crores. Yes, okay, not 1,000 crores.
Average quarterly run rate of only 200 crores.
200 crores.
Okay, and as in any sense, by when are we expecting to close the wage negotiation? Somewhere by mid of next year before elections, or it might?
It should be before elections. Our aim will be that. First meeting with the workers has already taken place. And we are going to have the second meeting in the month of July. And let's see how the things take shape. Hopefully, this calendar year, we will finalize it. We are quite hopeful.
And any adjustments or write-off you think we might have, as in write-back you think we might have to do in the backlog related to some of the pending projects which were non-moving or stuck?
Non-moving this year is not much. There is not much. Majority of the cases we already made the provision, fortunately.
Right.
We are not expecting any major provision. Rather some of the project which we were expecting last year, like Monet, etc. If this Monet project would have moved, one of the project I am telling, for which provision has been made, then we would have got the benefit in the bottom line. Let us see this year if these projects start moving further. Some of the projects are like that.
Right. And so what proportion, as in for the Director of Finance, what proportion of the receivables is related to retention money alone?
It's around, 64% is current and 36% is non-current. So retention money basically, right now, retention means, retention in what sense?
Anyway, you can, offline he will give you the figures of the...
Yeah, I can probably take that offline. So my last question, in your view, for execution of projects on ground, have you seen the bottlenecks easing out, and do you, as in, irrespective of how the timelines are paced out, but are you seeing improvement in the execution on ground, or the headwind still continues to persist when you're executing projects?
Sorry. Fortunately, the projects we are executing now, all of them projects are clear projects now. I mentioned the figure of 98,000 crore plus. As of now, there is no issue, except for one or two projects could be there. And we are going ahead with the execution of projects. We don't expect these projects to now anyway get stuck up.
Okay. All right, sir. Thank you so much and all the best.
Thank you. Thank you.
Thank you. We take the next question from the line of Harish Bihani from SBI Mutual Fund. Please go ahead.
Hello.
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 Hello. Hello.
Yes, sir. Sir, this receivables breakup that you shared, 5,500 crore of private receivables, who will these be predominantly? Which companies will these be?
There are many, in fact. I don't have the figures at the moment.
So, but just wanted to understand that
15%.
Is there...
No, he is asking out of 5,500, which are who are the major...
predominant... Can you share a couple of big names who are there?
Couple of big names, if you see. And there is of course, Lalitpur project is there, where Bajaj is there. Then Bada is there. Where JP is there. Hinduja's project is there. This Vijay project is there. And there is these 3-4 names immediately coming to my mind.
And how should we think about incremental provisioning from this particular area? Because, say, for example, JP or Bajaj Hindustan and others, we all understand that they are fairly stressed at this point in time. So how should we think about further provisioning from this 5,500 crores?
Basically, we will have to see our normal policy is after the trial operation, 3 years after the trial operation, we start making the provisions and case-to-case basis. Then we make the assessment. For example, Hinduja's, I don't find any problem that money won't be coming. That money would be coming. Lalitpur project, as such, we are hopeful that money will start coming once the PPA issues and other issues get solved, because project is running. JP, of course, we are in a close dialogue with JP that how to get money for the Bada. But provision will start after 3 years only, not now.
Okay.
And secondly, one very important thing is all these project people, they are dependent on BHEL for the after-sales service. Or even if somebody has to sell this project, then, we have to be in the picture. So we are hopeful that we will be able to recover, unless the project itself get, like a Vijit, etc., is in trouble. Then fortunately for the projects which are stranded projects, we already made provisions for all the private sector projects.
So stranded projects you have provided for, these are projects where...
Sorry, not audible.
So, yes.
Hello?
Sir,
yeah, so stranded projects you provided for, these are projects where either the work has got completed or work is almost on the verge of completing, and where you have some visibility that some money should at least come to us.
Yes, that is, I agree with you. Yeah.
Okay. And if you look, so what was this deferred tax amount, and why are we creating that deferred tax and fairly high number?
I have already replied. Deferred tax expense we are talking about.
I missed. Yeah, I missed on that part.
Actually, as per India's, we have the deferred tax assets are required to be reviewed this year. Actually, deferred tax assets were going up. The level was at the level. It was at the level of 800 crore.
Why it has to be provided?
What is this deferred tax for?
We have reassessed and reviewed the deferred tax assets, and there were certain assets and provisions on which tax benefit is not available in future. So we have charged those, assets and provision to tax expense.
So is this a 1-year scenario? Or
it's a 1 year. It's mostly a 1 year. There were certain only.
How did we get to that 40% tax rate, sir?
Actually, the tax rate this year it is 49%.
Yeah. So I'm just trying to understand that when we say that it will be 38-40% next year, so it should be at the marginal tax rate next year.
It will be much closer to the income tax rate, statutory tax rate. It will not be, I just even clarified further, it will be much closer to the statutory tax rate of 34 to 35%. Next year, 18-19.
Okay. And the last question, can you share the breakup of how much was the provision for bad debt, LDs, contractual obligation, and other...
Then I can share you separately offline.
Okay.
Oh, he will give you the data of that.
Yeah. Sure. Thanks so much.
Of that,
Yeah, thanks.
Thank you. We take the next question from the line of Chai Kankad from Haitong Securities. Please go ahead.
Yes, sir. Thank you for taking my question. Just again to understand this provision better, you talked about this provision for the quarter, right? The 2,000 crore provision, or is it for the full year?
That was for full year.
Full year.
So what would that be for the quarter?
Quarter is, for the 17-18, it was 1136 crore. I'm talking about the provision and write-off as against 1595 crore of the last financial year.
For March quarter?
For the March quarter.
Okay, sir. And, okay, the breakup for the provisions in...
That he will provide separately. For the whole year also and for quarter 4 also. Yes.
Okay. What kind of, so you currently on the balance sheet have a deferred tax asset of closer to 2,500 odd crores. What is this pertaining to? Is it pertaining to provisions that you created which are not allowed as per IT or anything?
Yeah. Mostly those provisions which are for which benefit is not available right now, and they are resulted into a temporary difference. Will be available in future.
Okay, so in future the tax rate will the rate will when this provision unwind.
Yeah.
If it unwinds, then the tax rate should come down significantly.
Yes.
In the year when it happens. Yes.
Unwinds.
Yeah.
Okay. Thank you so much. Yeah.
Thank you.
Thank you. I would like to remind all the participants, this conference call has been extended till 5:45 today. We will proceed to the next question. It's from the line of Aditya Bhartia from Investor Capital. Please go ahead. Mr. Aditya Bhartia, your line is unmuted. You may please go ahead with your question.
Hi, sir. Just needed a clarification. You mentioned that around 800 crore rupees provision has been created on employee expenses. My sense is that around 750 we would have created by 9 months itself. Does that mean that there's very little provisioning that has taken place in fourth quarter? And while in FY19 we would be seeing another 400-500 crore rupees of wage expense hitting the staff cost. Is my understanding correct?
So we mentioned that total impact of the wage revision will be 800 crores. It is the total impact we mentioned. But what has been 800 to 900 crores? What has been done? In fact, whatsoever provisions were made in the last financial year. I'll just explain to you. In 16-17, we had a total provision in the last quarter for the wage revision of 916 crore. Now we have, that was based on the ad hoc provision assessment at that point of time. Now we have reassessed those provisions and taking the present time into consideration, additional provisions have been made in the current financial year. Overall impact on an yearly basis, I said, would be the tune of 800 crores.
Okay. So, that essentially means that in fourth quarter there will be very little incremental provision that we would have created.
Yes, correct. Very good.
Okay. And for next year, you are saying another 400-500 crore rupees of...
impact is expected depending upon the wage revision, how it goes through.
Understood. And regarding debtors, you are mentioning that in respect of stranded projects, we have almost completely provided for. But projects which have become operational, over there we have not yet provided for, and they get provided for typically once 3-year period from...
After the trial operation, yeah.
And my sense is that for a lot of these projects, especially like Lalitpur and JP, we would be approaching the 3-year period?
No, when the trial operation took place of that?
That was last year, so it will come in next year. Provisioning will come next year.
So, after 3 years only. After 3 years. So next year only these trial operations have been completed. So after 3 years from the last year it will happen. But we are hopeful that that situation may not arise. Ultimately, we will be able to get our money back.
And under the ECL provisioning, sir, under Indes, do we also have to provide for time value of money?
Yes, we are providing for time value of money.
Okay. And my last question is, so on contractual obligation provisioning, with peak execution period possibly behind us, should we be seeing contractual obligation provisioning unwinding from here on?
Withdrawal. You're talking of withdrawal?
Yeah, withdrawal. Reversals happening at contractual obligations?
He's saying that
your withdrawal.
Why you withdrawal? Contractual obligation withdrawals now should start.
Yeah, definitely.
We feel that it should, unwinding should start now in a big way.
Okay. And this year also we would have seen some reversals happening on account of contractual obligations?
Yes. It has happened this year also.
Okay, perfect.
We are able to withdraw some 600 crore on account of contractual obligations this year.
This year. Okay, perfect. That's really helpful, sir. Thanks a lot.
Thank you.
Thank you. We take the next question from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you for the opportunity and congratulations on good earnings. Just trying to understand here a bit, when I look at your, EBIT margins for power, it's come down to 10.9 versus 13.9 last year. And similarly, industry has come down from 15.2 to 3.8. But at gross margin, or if I were to say, material costs perspective, they seem to have improved. Can you help me understand why is there dichotomy here?
You were saying that, in fact, just show me the segmental results.
EBIT margin, so 909 crores divided by 8,300 crores at 10.9, which was 13.9 last year for the fourth quarter.
You are talking of segment results?
Yes,
segment results, yeah.
But there we don't report any EBITDA margin?
No, EBIT margin. So
basically, he's saying that 909 divided by 8308. Okay. Segment revenue was 8308.
Correct.
So it has come down to 10.95 and 3.76 for the industry.
Yeah. And last year it was 1129 divided by 8109. It's 13.9%.
Okay, 13.9%. Correct.
And similarly for industry, 268 divided by 1756, so 15.2%.
Okay.
So it has deteriorated a bit, but if I look at the entire picture at company level, then EBITDA margin seems to have improved, and so have the gross margins.
I think you will have to see that what has not been allocated to power industry, how it has to be got distributed. Let us see, examine it, and this particular point will respond to
I just shared with other, that this is mainly because of share of this specific allocation of expenses to power as well as industry segment. It is because of that reason this common share has gone down.
No, his point is that overall how it has gone up, while the segmental it is gone down. Let me examine this particular reply, and by tomorrow our director of finance will respond to that.
Sir, actually the common expenses, unallocated expenses, which is not going to either power nor to industry, that has come down as compared to last year. So that's why I clarified, it is because of the specific allocation, because we have done this specific allocation to power as well as to industry. So that is one major reason. But definitely we'll talk separately offline on this issue also.
Okay. Secondly, while it's great that you won almost 100% orders, would you rate the margin quality of these orders superior to what you won in the past, or has it deteriorated a bit, or pretty much the same?
Basically, when the orders are secured in the competitive bidding, this margin depends on the type of competition we are facing. But we feel that all the 4 orders which have been secured will give definitely good return over the cost which will be incurring. If we compare with the earlier years, that depends. If we talk about for 4 to 5 years in the previous period, that kind of margins are not possible in this market. But definitely all the projects are remunerative and will be giving enough returns over the cost which will be incurring.
So versus, I don't want to go too back.
Just 1 minute. Yeah. And a company like BHEL, we have found if the top line grows and the fixed expenses, which is to the tune of 30% or so, if they get distributed over the higher top line, that is always beneficial to BHEL. So that's the reason we feel if the top line will grow, that will be possible to, whatsoever we have envisaged at the time of bidding also, we will be able to get better returns of that. Then second thing is what is happening. I'll explain to you.
Yeah.
All of a sudden, lot of 800 megawatt projects have come. How many come? I think 24. I think almost 24 numbers, exact number we can see that, have come in 800 megawatt. Now what we are doing? We are consolidating the requirement, and all these requirements, we are sourcing the material, we are negotiating in a big way from the BOP vendors also. And we are getting the benefits of all these projects.
Okay, that's good. Thank you so much. That's all from my side. All the best.
Okay, we will take the last question.
Sure, thank you. So the next question, which is the last question, it's from the line of Kunal Seth from Prabhudas Lilladher. Please go ahead. Mr. Kunal Seth, your line is unmuted. Please go ahead with your question.
Hi. I just want one clarification. When you said that there was a forex income which got accounted, how much was in Q4 in other expenses?
Just a minute. This was 192 crore.
192 crores. Thank you very much.
Okay.
Thank you. Mr. Sheth, do you have some more questions?
No, thank you.
Thank you. Well, that was the last question. I would now like to hand the floor over to the management for their closing comments. Over to you.
Thank you very much. Thanks to all of you for interacting with us and giving quite encouraging remarks also. Now, as you know that we have got a large executable orders, this is an opportunity for BHEL to have the improved performance in the short to medium term. Additionally, we expect, as I mentioned during my opening remark also, we expect demand for the power to get revived with favorable developments in the socio-economic factors. If we talk about the long term, our actions today are aligned towards increasing business from diversification and improving productivity besides sustaining growth in top line and bottom line. This will be largely from the development of business from the non-coal areas like defense, water, transportation and renewable energy. All things put together, as an organization, as TMBHEL, we are confident of sustaining the improvement in the performance going ahead. All of you should have the confidence in BHEL, which is now moving ahead on the energized path. Thank you. Thank you very much.